Hello and welcome to the very first episode of our new show, 11FS Spotlight. In this weekly show, we shine the spotlight on the best and the brightest in the financial services industry to try and understand what gets them going, what gets them growing, and what they really think of the future industry will look like. So joining me today, we have Jon Ostler, who is the UK CEO of Finder.com. So Jon, thank you so much for joining us. How are you doing?
Well, thanks for having me on the show, David. Looking forward to it.
No worries at all. I mean, that's either a very fancy backdrop in your home or you're in the office. So are you ventured into London today?
I have just popped into London, just for a little trip to the office to change the scene. But yeah, we are mainly work from home these days. So, but it's nice to see the old office occasionally. Remember, it's still here.
It does. I mean, it recharges your batteries a little bit, doesn't it? But for anybody watching this show, either on LinkedIn or over on YouTube, I mean, a big part of this show is going to be your involvement and your questions. So make sure you leave them in the comments sidebar. And what we'll do is we'll weave them into the conversation as we go. So maybe starting off, Jon, do you want to tell us a little bit about Finder.com? For anybody who doesn't know, give us your background.
I guess, Finders helps millions of people around the world, and we get about 1 million users in the UK, which is what I'm responsible, helping them make better financial decisions, and that's through publishing how-to guides. We have comparison tools, and those sorts of things that I guess help people with their spending and their borrowing and their savings and investments. So we cover quite a lot. I think we have a particular skew to what's new. And we have a lot of early adopters, so they're really interested in new ways of consuming financial services and the new products that are coming onto the market all the time. And that's really our gig, and that's what kind of gets us up in the morning.
I mean, that's really interesting, and that's no small base, right? Is it for a viewership and people engaging with the content that you're creating? But when you sort of say that target market, then who particularly is that for you guys?
I guess, we're quite diverse, but we describe them all as digital natives. So our audience typically, they want to, find and buy and interact with financial services digitally, self-service if they can, as opposed to, maybe a more traditional call center based interaction. So, definitely they're online, they're coming to Finder to look for those sorts of products and services to whatever problem they're trying to solve.
Well, in this period as well, I mean, so many more people are looking for an element of support or, understanding, a little bit of guidance in terms of what they should be doing to try and protect themselves in this period. So, I mean, have you seen an uptick in this period in terms of the viewership of the content?
Yes, we've definitely seen huge and even though the digital banking suffered from transactions not being carried out, which is sort of their business model, I think a lot of people obviously pushed towards digital banking type products to help them, especially small businesses. We saw a lot of activity there with a lot of people looking about small businesses and what if they should be starting one up and those sorts of things. And digital business banking is a lot easier than setting up with traditionals, which I know lots about. But we saw trends there. We saw lots of trends in share trading with the volatility, which was the fallout from the original COVID in March. And that sort of dovetailed with a lot of free trading apps and those sorts of things. So huge demand for those. We saw, lots of other trends as well with open banking. I don't know if you saw the latest stats on those. It's sort of, doubled to 2 million in the last 6 months. A lot of that being driven by people using personal finance managers more. From our perspective, a lot of unsecured loan providers that we work with, needing to get access to more information digitally, so they can sort of provide loans to people they can provide loans to, which has been quite challenging, obviously with a changing employment market at the moment.
Yeah, I mean, as you say, there's a very different type of market in this period, isn't it? I mean, perversely, some people are probably, I mean, I'm saving money during this period because I'm not having to travel from Norwich to London every day. So actually, people are looking for things that they can do to maximize potentially those opportunities in this period as well, aren't they? But just talking a little bit about, I mean, Finder is free. This is something that sits there that anybody can access. I don't want to be like that guy, but like, what's the catch? Like, what's the catch here?
Yeah, that's cool. We run a traditional publishing model effectively, which is advertiser funded.
Mm.
So we do offer full market comparisons in most of the major niches. And we do review every product and service we can get our hands on. And we have very strong editorial guidelines. So that's done objectively, no matter what relationship we have or don't have with the provider. As far as who gets the most prominence in our publications, those are obviously our advertising partners that we work with. And from my perspective, from the business side of things, we need to make sure that we have the best providers on the side, because that makes the editorial challenges a lot easier. If you've got a panel of the best providers with the most interesting products, then it's all good. But I think we're very transparent, and from studies that we've done and others have done, the audience is quite aware of how it works, and we're very clear on what's paid for and what's editorial and those sorts of things.
No, that makes a lot of sense, and like I say, it's a tried and tested model in that sense, right? So actually being able to do those things, but in a digital world, being able to kind of control those eyeballs and actually, the viewers of these things is super important, isn't it? As we well know at 11FS as well. But I mean, you touched a little bit a second ago in terms of your experience with traditional banking. I mean, do you want to talk to us a little bit about your background? I mean, have you strayed into the financial services world yourself?
Yeah, it's interesting. I had a background in digital marketing and doing a lot of consultancy over the last sort of 20 years. I think I had all 5 New Zealand banks, not really New Zealand banks, but Australian, all the banks in New Zealand as clients once when I was working in New Zealand.
Wow.
So, with consulting over the years, I've done a lot of work with banks, a lot of work with insurance companies, a lot of work with e-commerce. So I think that's given me quite a breadth of experience. So I understand their marketing challenges, I understand how the products work, and I think I can hopefully bring that to our audience with all of the fantastic experts we've got at Finder to really help people sort of work their way through quite a confusing landscape that is financial services.
Yeah, I mean, you touched on that a second ago. You worked in the sort of digital marketing space before Finder as well. I mean, has that aided this transition then? Because I mean, content marketing really, in its broadest sense, is about value, isn't it? Adding value. If you can really add value in terms of the content you're creating, your audience are going to value that in terms of what you bring to them. So that must have been a real help.
Yeah, I think that content marketing has evolved over the years. 20 years ago, it was a little less sophisticated than it is now. But I think we've got to a position now where the internet ecosystem rewards good, unique, objective content, and so it's a benefit looking to us and their intent and providing the best, the most comprehensive information possible. Then we are going to do well with our content marketing, and we are going to get those million eyeballs to the site each month.
Yeah.
So it's a win-win.
Well, it's an interesting one, isn't it? I mean, you don't have to go too far back in the day for start talking about white hat, black hat affiliate marketing techniques and various different things. Like I remember them. I remember them very well. Sometimes fondly, actually. It was a very interesting period for the internet, sort of growing through the white background with white text on for kind of keyword density things, like there's some really interesting things that people sort of went through. But I mean, it feels like there's a lot of challenges that you will have gone through to kind of create this organization, because like you say, the competitive landscape for information at this stage is very significant, isn't it? You only have to roll back 3, 4, 5 years, and actually there weren't really many people creating content in this space that really was human friendly in terms of it being readable or engageable or digestible. So I mean, how have you gone about building that? And 1 million eyeballs is a big audience, isn't it?
Yeah, I guess the one thing about content marketing, which is a bit of a barrier to entry, is you've really got to commit. You really got to commit to the investment in doing it properly, and that's not it's not an easy thing to do. It's not a cheap thing to do. Your returns are over the long term, as far as building up a brand and building up that traffic and monetizing it over many years, and I think that is a barrier to many that aren't able or aren't willing to put in the effort that's required to really do well. So that is something that Finder's always sort of believed in, and we do have most of our employees are, either writers or publishers or building tools to help people find better products. And so that's a big investment we're able to do as a global business. And so we're able to enter new markets like the UK, which have been here 3 years, and succeed. So that's worked out well for us and worked out well for our audience, I guess.
And talk a little bit about your background before that, from a company's perspective, because you founded over in Australia, didn't you?
Yes, when I was in the UK, graduated sort of '96. I did a couple of years in military intelligence, which is quite different. And then
I presume we're not allowed to talk about that at all, right? There's going to be like classified documentation, like we're not going to be able to.
Something like that, yeah. I could tell you, but I'm gonna have to kill you, sort of thing. So I did that for a bit, but then got into digital in sort of '98, building websites for friends of a friend and those sorts of things. And I ended up in New Zealand with my wife, and we were down under in New Zealand and Australia until 2014. So a big chunk of years, and built up a number of digital businesses over there. And we had a restaurant guide, we had a search marketing agency, all sorts of things. And basically what happened, I sold our digital agency to the same company that the founders of Finder sold their original company to back in 2007. So I met Fred and Frank then, and we were both sort of founders together, and we'd sold our businesses and worked together for a year or two, and then Fred and Frank went off and set up Finder, and I went off and bought and sold other companies and did that, and then eventually returned back to the UK in 2014. I actually launched the digital agency here for some friends from Australia, so I'd sort of worked that one out, and when that business was sold, I think I got a LinkedIn message from Fred from New York that he'd just set up the Finder over there and been there about a year, running Finder US. And he said, "Hey John, how do you feel about launching Finder into the UK market?" And I said, "Yeah, that sounds good. I love the company. It definitely ticks lots of boxes of what I was looking for." So yeah, I jumped on board then, launched in 2017, and the rest is up to the right, as we like to say.
That's amazing. I mean, how have you found the different geographies then? Because different geos, very similar financial instruments in terms of what's there, but fundamentally different geos use them in very different ways, don't they? So, I mean, have you noticed any major differences between Australia, New Zealand, and the US business, the UK business?
I guess there are some big differences. Obviously, in Australia, we're the market leader, and we've been there 12 years. So that's a bit different to being a challenger, trying to bring something into the UK market. And I like to think of the UK market as a mature market. It's the most sophisticated comparison market in the world. But I think being a mature market actually makes it easier for us, because everyone understands, consumers understand, how you compare financial services and what that looks like, and so do providers. So I think that helped us in the market. Product-wise, it's quite interesting. Car insurance is the biggest category in the UK, but it's a very small category for comparison in Australia. Health insurance in Australia is a completely different product to health insurance in the UK. So that you find differences like that. You find differences in the margins in financial services. Obviously, the financial services here, been heavily influenced by Europe. And so there's a lack of margin in some of the products compared to places like the US and Australia, which might still have margins in those products. So the marketing mix is different. So it's it's really interesting. Obviously, the UK has been spearheading fintechs, and across Europe as well. So I think that's a big difference in that. I think London is definitely ahead of the game on a lot of those sorts of things, and that's where we spend a lot of our time as well.
Sure. I mean, we're definitely doing not so bad so far. Let's see what Brexit does in a couple of years, right? But the rest of the world is definitely sort of catching up. And I think as we've talked about a lot before, the regulatory climate in other geos, and actually back into Australia, like the climate in Australia or New Zealand or actually like Hong Kong and Singapore, is the whole world is coming alive on these things, which is amazing. But I mean, how have you gone about building the team here then? So you say from 2017. I'm a big believer that culture and talent really drive the accelerant around organizations being successful. But how have you found building out a team of talented people in the UK?
Yeah, building teams is always the hardest. And I guess I have the philosophy of going slow. No hire is better than a bad hire. And we do put a lot of time into finding individuals that we think have sort of the right underlying attitude. They want to make a difference at Finder, and I guess we look for that kind of spark first, and then sort of the competencies after that. I'm a big user of psychometric testing in recruitment. I know some recruiters like it and some recruiters hate it, but I've been doing it for 20 years, and I get a good feel, and it really drives sort of what questions to ask, what to probe, strengths and weaknesses that get turned up by that sort of kind of pseudo scientific approach to recruitment. But I find actually we do assignments, so practical assignments in final interviews, and I think that is probably the most useful thing to do in recruitment, is actually practical tasks where people can actually shine and show what they've got to deliver.
Yeah, it's interesting, isn't it? A lot of people can talk a great game in an interview, can't they? But putting it down to a great now show it is an interesting challenge for some, isn't it? So
I like everyone I interview. So like, yeah, they're great, they're awesome. I wouldn't have got to an interview if I didn't think they were going to be great. But we do use that sort of process to really find people that we think are going to be happy in the roles and are going to be able to succeed. So.
Yeah. So, I mean, talking a little bit more then about the time period that we're in, obviously, there's a reason why I'm sat at home, and I think you're probably sat in an office with not many people in it right now. COVID and the pandemic and everything that's happened has had quite a pretty significant impact on the world. But how has that affected you guys? What's the change? Obviously, we touched a little bit earlier on, and users are probably a bit more hungry than ever before for good advice. But how has that affected the business more broadly?
Yeah, so a couple of elements to that, I guess. Finder has always had quite a large remote crew. So we've got offices, we've got 5 offices around the world, but about 400 staff. But a sizable percentage has always been remote. And as a business, we run the whole business in the cloud. So and everyone's got laptops. So there's not actually anything on the laptop apart from a browser, effectively. So we were very well prepared for the work from home switch, where it's like, grab your laptops, guys, off you go home. And we were already big users of Zoom, being sort of a global business, and we're big users of Slack and Jira and Confluence and those sort of tools, which are really handy when you're trying to run a remote business. So we were super well prepared for that. So quite friction from that side of things. Didn't do so well for the social club. That's been a bit of a challenge. There's only so much Zoom trivia you can play, but I think that the softer side is what's been the biggest challenge in keeping everyone socially connected. Those that are living at home on their own in a flat, and keeping those guys sort of motivated and healthy, I think is been the biggest challenge for us.
Yeah.
As far as the business performance, luckily we're quite diversified. So we obviously saw things like personal loans and credit cards drop off a cliff because lenders couldn't lend because of the uncertainty of future affordability, which is kind of quite right, and everyone's been working very hard how to solve that problem. And then other things like share trading and those sorts of things, which sort of went through the roof. As far as interest in those products, which is, it just really accelerated a lot of things that were already happening. There were a lot of people interested in the sort of new share trading tools and apps. There were a lot of people interested in open banking, and I think what we saw was an acceleration of that, which meant that that's been a very busy business for us.
Well, there does seem to be a real uptick, as you say, from that amateur day trader type of approach, right? So and actually people, like say, with a little bit more of an openness, because we're seeing sort of some stocks, Tesla and Apple, dividing shares and quadrupling in price over a very short period of time. People seem to be sort of getting their almost their cryptocurrency hit from like normal shares. But I mean, is there anything you can see in the data of like the types of people who are doing those things? Because I mean, I've always seen sort of that type of day trading as a it's almost gambling for people. You know, I've always been given the advice with stocks and markets trading is like the best thing you can do after you invest is to forget about it for 3 years, and then you won't get paranoid about the ups and the downs of the markets and everything that really sort of come with it. So, I mean, is there a particular type of person or a particular demographic that you think are really investing in this period?
Yeah, we have done some studies, and generally everyone's, I think it was 30% people more likely to invest than our last survey, and if you look at Generation Z and Millennials, then 75% intend to invest, which has effectively it's lowered the average age of the investor, I think, from 56 to 50, just with that young audience coming in, and obviously they're super app friendly, and the free share trading has helped. Like I'm very keen on young people being involved in investing. I'm not super keen on the day trading aspect that I think it encourages a little bit. So I'm hoping, and that's something that we hopefully we can provide all the information to people. So have a dabble on the share market. That's fine. If you want to build wealth, then regular investment in in long-term investments is really what you need to be doing. So so I'm very much in favor of young people thinking about investments and understanding the markets and how those work, and I think that's fantastic. I think we do need to follow through with the education. I think everyone sort of plays their role in educating on how do you actually build real wealth. You're not going to make it on a Tesla one-day trade. It's like you need something that's got a little bit more reliability and less risk. So
well, then, and that's the difficult thing, is when people are looking for gains so significantly, it inherently is risky, because you're putting all your eggs in one or two baskets that may or may not come off. And that's why I've always given two bits of advice. The first one I just said to you about, if you buy stock, forget about it for at least 3 years. The other one was, don't gamble with money you can't afford to lose. And that, I think if you kind of stick to those two, then it's investment is the opportunity, but really your investment amount is at risk when you're doing those things, which is really a challenge for people, really. But I mean, one of the other areas that we've definitely seen a hell of a lot of change in over the last probably 2 quarters is the amount of financial services that are really geared towards children. And I don't just mean like in my day when Halifax had like a nice book with a line on the front of it. I mean, like genuine like accounts that are really geared towards children and the needs of children and the needs of adults kind of supporting them as well. So, I mean, have you seen many people sort of coming for that type of information as well?
Yeah, I think there's lots of reasons for that. Again, it was something that's been going for quite a while, with the Go Henrys and the Rooster Money and those guys do a really good job of that sort of the value of money products for parents to give to their children, which I think are fantastic. And I think we saw an acceleration of that. It's we don't want to pay with cash. There's been a big uptake in contactless payments, so it's like, I need to get a card for my kids. And I think that has stirred up that market, which has always been quite a niche market. I think we're now seeing Starling and Revolut enter that market, and I think it's a really good. Those are some really good products out there if you're a parent, and really helps teach the value of money. And I'm hoping to see those products expand into things like investing. I think there's a couple now looking at those junior ISAs and plugging that into the sort of service as well. So I think that's one thing that a digital experience on your phone can bring is I guess teaching good financial habits. So regularly interacting with your money in a meaningful way and being able to comprehend what's going on with your money. And I think that can be used to build better habits. And generally, children or adults generally don't spend enough time looking at their finances that they should. And often that's just because, historically it's not been that easy to look at all your finances and really get insights. And I think that's something that we are seeing a lot more of with a lot of the personal finance managers and a lot of the neobanks and digital banks, really kind of thinking about how they can add value to consumers. And I think that's been a massive gain over the last couple of years from traditional banks where you never looked at it.
Well, it's interesting, isn't it? Because we talk a lot about financial literacy in adults, but actually with an increased amount of products that are really geared towards children. I mean, not that children are the buyers of them, they're the users of them, or the beneficiaries of them anyway. Then financial literacy as a content mechanism, have you guys thought about financial content for kids? Because there's while they might not be searching for it, definitely their parents are. I'm sure everybody, if anybody's listening to this who's got a kid who is about 6, they're worrying about how to give people pocket money and whether there's a trade-off, and what the trade-off for chores to pocket money does to them psychologically for their future and all of these things. So there is an amazing amount of opportunity there, isn't there, to provide a different service for different people, isn't there?
Yeah, I guess those are the products that our audience are interested in and we're interested in writing about. So we have if you check out the site, there's a kids debit card, a kids bank account sort of section in there, reviewing all of the major providers that are providing those products. And I think it's a great thing to do to get your kids involved in money early. I mean, we've got I think it's now in the syllabuses of schools, but I think in most cases it's from a factual basis as far as the numeracy side of things, which is taught in maths of finance. I think it's much harder to teach habits in that environment, in the school environment. You can teach facts and you can test people, but I think you need to go a little bit further to really develop that kind of healthy attitude towards money.
It'd be fascinating, wouldn't it? I'd love to write a guide for kids to negotiate pocket money with their parents. That would just be such a good fun thing to do, wouldn't it? But
my kids already have,
as long as my kids don't read it, that's the thing. Yeah. I guess looking forward a little bit then, obviously, I mean, 2020 has been a bit of a funny year, isn't it, with everything, with COVID and all the changes, and inevitably the sort of downturn we're sort of seeing now from a markets perspective. What do you hope to see next year other than COVID buggering off?
Yeah, apart from a vaccine, which would be handy. I think there are going to be a lot of businesses and a lot of people are going to be facing a lot of challenges. I know, obviously, there's a lot of people that are saving more by staying at home and not going on holiday and not going to work and those sorts of things, and so they're all building up a nice little nest egg. But millions of people are going to be facing some big challenges over the next 12 months, and I hope we can play our part in providing information that's going to be able to find solutions. And I think that's what we've seen in the furlough scheme and things like that. We've seen creative solutions to big problems. And I think from the financial services perspective, there's a challenge there of how do we support people that are going to be in financial difficulty over the next 12, 24 months, and what financial services products can help on that. So if that's PFMs, or if it's lenders working out open banking based lending products and those sorts of things, it's like there's going to be big challenges, and I hope the industry and we can all play our part in helping those people out.
Yeah, I mean it's quite terrifying to think about that, right? Because essentially, I mean, if you look at the crisis that we had in 2008, we were still feeling the effects of that before COVID kicked in. So that is 12 years later, we're feeling the impact of those changes. And actually, obviously, all of the measures that we've seen of GDP hit and everything that's happened, then I feel like this is going to be the ripples from COVID are going to go on for a really long period of time. And actually, like you say, the level of support and the level of guidance that people on over in the comments. So, and Tameen Ahmed says, wedding type features such as pensions, investments, and integrations. Maybe two questions there, but where do you see the aggregator apps market going?
Yeah, I think five years is a big call. I would love to know what it's going to look like in 5 years' time, given what it looked like 5 years ago. Yeah, certainly there's going. Will there be consolidation? Will there be more specialist apps? Those are sort of the questions. I know certainly there's a few players that are looking at the Uber app that is going to do everything for you, and we'll have lots of kind of headless financial services that will just plug into these apps. And so the market will be divided between the providers of financial products and the managers of customers. And I think that is probably a pretty good bet that there's going to be companies that are specializing in customer experience and user experience,